I'm Kenny Gott, Certified Financial Planner Consultant and President at Pycheck & Associates in Springfield, Missouri. Choosing a financial advisor may be one of the most important decisions you ever make. We hope you choose us, but either way, we think everyone should get with a qualified advisor at some point, and the sooner the better so you can get ahead of planning your financial future. This topic is right in the first chapter of my book, Bottom Line Financial Planning, Manage Risk and Fund the Good Life Your Whole Life. We'll give you a free copy when you meet with us, and if you like, we'll give you a second opinion on your current advisor and the advice they're giving you and see if maybe we can do better. I once saw a so-called financial advisor's business card that had the guy's name followed by CTM. That's an old-timey thing called Competent Toastmaster. You take a public speaking course, pay your fee, and you're a CTM. What's that got to do with financial planning? Absolutely nothing. The guy just thought it looked better to have some initials there. So here's how to evaluate a professional designation. Google those initials and look beyond the description that's there for the public. Pretend you want to get that designation yourself, and then click the links on how to do that and find out how much study it takes, what knowledge they have to master, how extensive the testing is to get the designation, whether there's an experience requirement, a background check, and very important, whether or not it requires continuing education. In other words, ongoing training and information updates. For example, I'm a CFP professional. So this took about 2,000 hours of study, covering the financial planning process itself, investing, retirement planning, tax planning, estate planning, insurance and risk management, and employee benefits planning. It was 10 hours of testing over a 2-day period. I had to have 3 years of field experience working with clients. Yes, a background check, and I take 30 hours of continuing education every 2 years to renew my certification, including 2 hours of ethics training. And I don't wait till the last minute. I get education credits periodically, kind of all the time. So if somebody makes it through all that, if nothing else, you at least know they have a certain level of knowledge and experience and some persistence. Other designations are less rigorous. For example, the Certified Financial Fiduciary. This is a 1-day training course which you can do online. It's all about what a fiduciary is. That's it. The test is a 100-question exam you have to get just a 75% on. There is an experience requirement and a background check and some continuing education each year. Ironically, though, a certified financial fiduciary is not necessarily a fiduciary at all under the law because they don't have to be securities licensed. They just agree to behave in a fiduciary manner in order to keep the designation. To be clear, I am securities licensed, so in addition to the CFP fiduciary requirement, I'm legally held to a fiduciary standard when I'm discussing securities investments with clients. Now, I'm not picking on the Certified Financial Fiduciary designation. At least it has the right spirit, teaching advisors what a fiduciary means, even if there's really nothing there beyond that. Just don't give that designation too much weight. There are better ones, and there are worse ones. And by the way, if an advisor is securities licensed like we are, be sure to also go to finra.org to check their education and experience and see if there are any complaints against them or regulatory actions. If an advisor doesn't show up there, it means they're not securities licensed. The next thing we think is very important, efficient investment choices. We have a separate video on this topic. Check that out. It's really eye-opening, and there's more detail in the book. But in a nutshell, this is about keeping your investment expenses low so you have better long-term growth potential. We give a lot of second opinions for prospective clients who bring in their account statements for us to analyze. And we can do the same for you. And I'll tell you, the vast majority of the time, we see advisors using active mutual funds instead of much lower cost index funds. Index funds are a fraction of the cost of traditional active mutual funds, and that lower cost is money that stays in your account working for you instead of going to a fund manager who most likely over the long run will add zero extra value for the extra expense. If an advisor balks at the idea of index funds, or if they try to tell you that active fund managers do better, even if they have a slick brochure that claims to prove it, look at who produces that information. If it's a mutual fund company that the advisor wants you to use, well, then that's not an unbiased opinion. Come in and we'll show you how they spin it and why efficient investing just works better. Now, there's another kind of efficiency, tax efficiency. Again, bring in your account statements and we'll see if you have federal tax-free municipal bond funds in there where appropriate, for example, and growth stock funds that produce less taxable dividends without giving up growth potential. Talk about loss harvesting and other investment tax management concepts. We're not accountants, so we're not offering income tax planning. This is about tax management of your investments, which we're very good at. Next, scope of services is about what you're specifically wanting from the relationship. Some people just want to talk about one of their particular investments and that's it. Others need a full-on retirement analysis and a lot of planning advice, and they may have a broad investment portfolio they want us to manage. So narrow scope, broad scope, somewhere in between. You just have to make sure an advisor is equipped to help you with the things you need right now and also with whatever you may need in the future. Okay, next you want to understand how an advisor makes their money. There are several variations, but you just want to make sure it's fair because, yeah, we advisors have to make a living, but like anything else you buy, the price should be fair. So be a smart consumer. Here's a quick rundown. Most brokerage accounts charge an annual or quarterly fee as a percentage of the account value. It doesn't matter what products they put you in, they make the same money regardless. Try to find a good advisor that charges around 1% or less. Some people think commission is a dirty word, but there are some legitimate products like fixed and indexed annuities, for example, that only pay commissions, which just means the advisor makes most or all of their pay up front. It's not necessarily better or worse. Now, some advisors could be tempted to oversell commission products for that upfront payday, so always ask what the alternatives are. If they can't or won't go there, that may be a red flag. If they can tell you the pros and cons of 2 or 3 different products, well then they're acting more like a consultant than a salesperson. Just be a smart consumer. Look at more than one option. Fee-based usually means part upfront commission, part ongoing fee. For example, A-share mutual funds with a front-end sales commission and then a smaller ongoing trail. So again, not good or bad, just depends on the circumstances. A flat planning fee. For example, if you have your investments with us and you need a retirement analysis, that's just part of the deal. But if somebody just wants a standalone retirement analysis, we can do that for a flat fee. Some advisors may charge an hourly fee, but that's rare. So again, overall, just know what you're paying before you engage with an advisor and make sure it's a fair rate. All right, here's the final piece of the puzzle when choosing an advisor. Communication style and compatibility. Now, obviously, going to an advisor's website only gets you so far, even if they have videos of themselves like this one. You have to sit across the table from an advisor and have a conversation at some point. See if it's someone you can talk to. Do they explain things clearly? Do they seem to know what they're talking about? Do they listen to you and act like a consultant instead of a salesperson? Is their staff friendly and professional? A lot of this is more about your gut than any data you can gather. Now look, I know maybe you're thinking maybe we came up with all these criteria for choosing an advisor just to drive you toward choosing us instead of somebody else. But actually, it's kind of the other way around. We know what makes a good advisor, and we've done what we needed to do to fit that bill. I went for the gold standard certified financial planner professional designation because it reflects the broad scope of our knowledge and our services. We're both securities licensed and insurance licensed, so we can offer all kinds of investments, and this really sets us apart from most advisors. When we use efficient index funds instead of traditional mutual funds, we actually do more work without making more money, but it's better for clients. So even from a purely selfish business standpoint, we think we'll lose fewer clients if we're investing in a way that other advisors are unlikely to beat in terms of both cost and performance. Our fees are transparent and fair, and we bring a lot of value to clients. For example, if you haven't looked at our recession reserve concept, we have a video on that, and it's in the book. It's how we plan account withdrawals so you can worry less about recessions or not at all. The way we look at it, we'd rather keep existing clients and take good care of them so they refer their friends and family to us than have to spend time, money, and energy finding new clients. So here's our number. If you're not 100% happy with your current advisor, call for your complimentary consultation and we'll see if our communication style and compatibility is a good fit for you in addition to our services, and then see if we can help you do better so you can quit worrying about whether your advisor is the right one for you so you can focus on living the good life. Remember, it's your future. You earned it. Thanks for watching.